Nigeria is on the brink of receiving its official inflation figures for April, while projections from the Financial Derivatives Company, FDC, paint a concerning picture. FDC estimates a significant surge with inflation potentially reaching a staggering 34.25%. As we wait for the official data, we will delve deeper into factors driving this anticipated rise in inflation, what solutions are in sight, and how accurate FDC's prediction might be. Joining me for this is Azeez Lawal, the Managing Director, TrustBanc Asset Management Limited. Thank you so much for joining me today. I guess you're muted.
Yeah, good morning. Thank you for having me.
Okay, great. FDC projects that inflation will surge to 34.25% in April. As we expect the official numbers any moment from now, I would like to get your thoughts on this.
Yeah, once again, thank you. Yeah, that is the expectation, right? That inflation will move beyond what we saw in March, right? The only thing is that the positive is that the pace. So based on that projection, apparently the pace they are factoring in is about 1%, 100 basis points. Before the previous month, it was like 150 basis point, 1.5%, and the month before it was 1.8%. So it's expected that it will go up, but the positive there is that the pace will be lower, particularly on the back of the strength that we saw in the naira in April, right? So yeah, again, these are projections, right? These are projections. However, considering the recent economic factors such as global supply chain disruptions, energy prices, the devaluation, right? It expects that this pace will be sustained, even though at a reduced pace, like I mentioned earlier. Thank you.
Well, you're talking about the pace, but then many times when people question the slow pace of deceleration, analysts would often attribute it to the inherent lag, between policy implementation and its tangible impact on the economy and the populace. But then for how much longer do we have to wait before we sort of start seeing the real deceleration here? Not just month-on-month deceleration, but year-on-year, where we know that, okay, rather than increasing to 34, it's rather coming back to maybe 32, 31, 30, 29. Isn't it clear that Nigeria's inflation is structural and must be treated as such?
Yeah, thank you. You raised the valid point, right? And the debates around the structural impact of the structural elements of Nigerian inflation. It's been forever, right? Even though most of the time we tend to tackle them, like we've seen recently with monetary policies, right? But what analysts typically say is that the measures to tackle inflation, they require measures that go beyond monetary policy, and even though it's important to maintain focus on short and long-term solutions, and while monetary policy can provide some relief, tackling the structural issues will definitely be crucial in achieving a lasting inflation control, right? And like you rightly mentioned, why not jump from 33.2 to 28 and at a faster pace? Again, when you ask questions like, are farmers still finding it inconvenient to get to their farms? Are goods still being able to move from one point to the other in Nigeria easily with little disruptions? Can we bet on the fact that for 20 or 30 straight days in a month, there will never be queues? The moment we can answer this legacy issues, right? So no matter what the CBN is doing, if we can address these legacy issues, definitely, even if the CBN is doing much to tame inflation, that impact, the lag, will always be extended until we start addressing those legacy issues. But like I mentioned earlier, the good thing is that we hope that the pace, on the back of some of the policies that we've seen from the CBN, that the pace will continue to be slower. Thank you.
All right, while we expect, other things like the structural things to be put in place, there are indications that the MPC might continue to hike interest rate. If this continues, I'm just wondering, for how long can we continue to do that?
Yeah, thank you. Key to the input in inflation is the fact that the naira is not strong. Because the naira is not strong, so you see that including logistics costs and cost of materials are kind of inflated, right? So if the CBN, as a result, the CBN is forced, right, to raise rates. One of the impacts raising rates does have is to strengthen the naira, right? If it strengthens the naira, so on that part, right, you expect that the raw materials, the logistics that feeds on the stronger naira, right, will kind of reduce cost and reduce inflation. So on the CBN parts, I would expect that at the next MPC, right, there is a strong possibility that they will further still hike rates, maybe possibly by another 50 basis points, 0.5%. Yet today we've seen 600 basis points, right? And we've also seen that when those rates were raised at some point, it's provided that the motivation or the incentive for foreign investors to come into Nigeria. When foreign investors come, of course, definitely the inflows of FX into your country will improve, and as a result, that will strengthen the naira. We have seen that play out. The question that analysts are now beginning to ask in the last 2-3 weeks now is the fact that, again, is this sustainable? But regardless, we'll still expect that MPC will possibly raise rates again, possibly by another 50 basis points. Thank you.
I like the question you asked. Is this sustainable? I was going to ask you the same question if you had not asked, but I will still ask you, is it really sustainable to continue like this? Or what more do we need to do to ensure that on the part of supply, we have it, and then on the part of demand, maybe it's reduced, basically? That's for Forex, foreign exchange.
Yeah, thank you. That's a lot in one, right? Yeah, raising interest rates, we all know it's not sustainable, right? You can't continue to raise rates to strengthen your currency, right? What seems to be sustainable is how we can improve local content, right? Where we can reduce our imports and the need to get FX to make these imports, to buy these imports, right? To buy these imported materials, right? And key in that importation basket presently is imported petroleum products, right? And we expect that with Dangote coming on board, there was also the report that came out recently that Dangote will start supplying PMS in July, right? We have already seen diesel, and we have seen that already it's beginning to impact on the price of diesel. In fact, one of the factors, one of the key inputs into the model that, the inflation will possibly recede the pace of inflation will recede in April is the fact that lower diesel cost is expected to reduce logistics costs generally and reduce the pace of inflation. So still speaking to what we can do sustainably, local refining definitely will sustainably will sustain that is a key requirement for sustainability.
All right. Thank you so much.
Refineries coming on board too is also key to that.
Great. There's a lot to say, but we just have to go. Thank you so much, Azeez Lawal, for your time on the show today.
Yeah, thank you so much for having me. Thank you.